We all know the story about the core economic resources, right?
Gold, then oil, then data. But now there's a new candidate that's extremely important in the digital world. That is computing power, also known as hash power. It's not just the fuel for AI or the security for blockchain, but it's also the energy for the entire virtual universe of the metaverse. Sounds like an extremely valuable asset, doesn't it? Yes, absolutely. But the paradox is, in reality, more than 80% of this resource is actually in the hands of just a few giant corporations. Ordinary people like us have almost no way to participate in or benefit from it. That's also why today we're going to explore a new project together called Luma Protocol. Based on the videos and explanatory materials about this project that we've gathered, we'll find out what Luma is, why they call themselves DeFi 3.0, and will they really open the door to accessing hash power for everyone? Okay, let's start dissecting these sources. Yes, let's get started. Maybe before diving deep into Luma, I should briefly recap the DeFi context. Yes, that's a good idea. We've already seen DeFi 1.0. It exploded and then fizzled out pretty quickly. Mainly because the yield farming model just led to mining and dumping, which wasn't sustainable at all. Right, it all relied on sky-high token incentives. There was also something called protocol-owned liquidity, or POL. Yes, protocol-owned liquidity. Kwong pointed this out very clearly. If there's no real asset as a foundation, then all the prosperity in DeFi is just fleeting, just an illusion. Yeah. This sets the requirement for what people are calling DeFi 3.0. That means it has to be based on real assets, must have intrinsic utility value, and must be accompanied by a more sustainable economic model and a fully supportive ecosystem. I see. And this is exactly where the current problem with hash power lies. This exclusivity, inaccessibility, and lack of liquidity meet the potential of DeFi 3.0. And the hash power market is by no means small. In 2023, it's around $37 billion. Some even predict it could triple by 2030. Wow, that's an impressive number. Clearly, there's a huge unmet demand here. An opportunity to financialize this resource more efficiently. And Luma Protocol are mentioned in the materials as solutions to this problem. Yes. It's said to be co-founded by Popchain and Sunnivex, and Luma positions itself as a hash-powered DeFi 3.0 aggregation platform. That sounds pretty ambitious, doesn't it? Also quite bold. According to the sources we have, their stated mission is to tokenize, financialize, and popularize hash power.
Yeah, to put it simply, it's about turning this hard-to-access asset into a kind of global dividend like...
Anyone can participate, not just the big tech players. That's right. The real value anchor that DeFi 3.0 needs, Luma claims, is hash power. They want to turn computing power into certificates on the blockchain that can be verified, traded, and used as collateral. Oh, and more importantly, according to the documents, they've significantly lowered the barrier to entry. There's an example of a user named Alice who can get started with just $100. Oh, only $100? So specifically, how does the cash flow work if someone like Alice wants to participate? From what I understand from the sources, the process seems to involve a few steps. First, you have to buy POP tokens on the Nevex platform. That's right. Then you use those POP tokens to invest in Luma. This investment is then apparently split in half. Exactly, it's split 50-50. Half goes into a fund called the Insurance Fund or the Stability Fund. It sounds like a kind of safety net, right? Yes. The purpose is to guarantee the principal and manage market prices in certain cases. So what about the other half? The other half will be transferred into what's called the hash power mining pool. Basically, this POP amount will be converted into Luma's native token, which is Luma. Then it's automatically put into a double reinvestment system, which people in DeFi often call a yield aggregator or aggregato. Yield aggregator. It's like turning on the auto-compounding mode for your savings account. The goal is to optimize profits without having to manually intervene all the time. So users will receive Luma daily and they can either withdraw it or leave it for the system to automatically reinvest. Exactly, that's the floating pool. But what's really noteworthy, according to the documents, is the rather complex layers of mechanisms designed behind the scenes. The purpose is to create balance and encourage people to participate for the long term. Complex, huh? Yes, this is the point where Luma seems to be trying to learn from the failures of DeFi 1.0 and 2.0 before. So, what are those mechanisms? Sounds like there are a lot of layers, right? That's right, quite a few. I can summarize a few key points. First is the way they distribute profits from hash power.
It doesn't just reward individuals based on their contributions, but they also allocate a significant portion to reward team building, community development, and another part to promote overall market activity.
The goal is to create incentives at all three levels: individual, community, and the entire system. That's interesting. Is there anything else? Second, there's a ranking system called V-Rank, from V1 to V10. It's based on contributions to the community, calculated in USD achievements. The higher the rank, the better the hash power multiplier users receive.
This is clearly a way to encourage people not only to invest money, but also to actively build the network.
So is it fair for those who join later? Because usually in DeFi, early entrants have a huge advantage. Yeah, this is quite an interesting point that Luma is trying to address. According to the documentation, they have a mechanism called time-based hash power compensation. Time-based compensation? Yes, the specific formula is quite complicated. Hash power equals the amount of money invested multiplied by 1.015 to the power of n, with n being the number of days. But the core idea is this. Early participants still have an advantage thanks to the compounding time factor, but those who join later are also compensated with some computational power to help narrow the gap. The goal is to keep both existing and new participants motivated. Oh, that's interesting. So it's trying to be fairer. So how about calculating daily profits? Is it very complicated? It is actually quite complicated. It ties the output to a lot of different factors. Total investment, number of network nodes, participation time, and the overall growth rate of the ecosystem as well. But the key point here isn't about memorizing that formula, it's about understanding its purpose. Yes, Luma tries to make the reward output flexible so it can self-adjust according to what they call the health of the ecosystem. But at the same time, there are also coefficients to minimize any extreme short-term volatility. This issue of sudden volatility is really a pain point for DeFi, isn't it? That's right. Besides that, they also emphasize the profit model. It includes both a static part, which comes from individual contributions and the insurance fund, and a dynamic part. This dynamic part applies several network principles, such as Metcalfe's law and RE8. Simply put, the value of the network increases exponentially as more people join and connect with each other.
Luma usually considers the creation of connections as part of this group.
It sounds like there are a lot of mechanisms to create Luma tokens. So how do they control inflation? This is the classic problem of DeFi, isn't it? Yes, this is a very important point. The dual burn mechanism. When users sell Luma, a large portion, 55% according to the documentation, is burned permanently, meaning it disappears from circulation. 55% is a lot. Yes, the rest goes back to the liquidity pool, the swap pool. In addition, that liquidity pool itself also automatically burns a small percentage of tokens every day. I think it's about 0.5%. So tokens are burned both when selling and automatically every day. That's right. The goal is very clear: to continuously reduce the circulating supply of Luma on the market, creating scarcity, and hopefully supporting the token's value in the long run. This is a direct effort to avoid the pitfalls of previous DeFi tokens, which only kept issuing more and more. It's clear that there's a pretty well-calculated system inside Luma, but as mentioned earlier, Luma doesn't operate alone. The documents emphasize a lot on what's called the synergistic ecosystem, which sounds quite impressive. Yes, the tripartite ecological synergy. The first party is PopChain. According to the description, this is an EVM-compatible layer 2. They provide users from their Web3 social network, then a decentralized identity system, DID, and importantly, a high-performance, low-fee blockchain infrastructure. It's like a main gateway for users to access Luma, right? Exactly.
PopChain solves the problem of how to attract the initial users for Luma.
Next is Nevix. Nevix is introduced as an exchange, but they emphasize global regulatory compliance, saying they have licenses in the US and many other places as well. Yeah, this compliance factor is important.
Nevix's role is to provide liquidity, meaning it's a place to buy and sell Luma with major currencies like BTC, Ethereum, USDT, and even derivative products.
And more importantly, Nevix is positioned as a secure and legally compliant gateway. The documents even boast that Nevix is among the top 50 global exchanges, trading nearly $1 billion every day. Yes, this compliance factor and deep liquidity are very noteworthy. It addresses one of DeFi's biggest barriers to date, which is connecting with the traditional financial system in a legal way and ensuring user safety when they want to convert digital assets into cash, for example. And finally, the third pillar is Punkverse. This is mentioned as a bridge to the traditional capital markets. There is even information about a potential listing on Nasdaq and a mechanism for tokenized stock co-ownership. This sounds a bit unusual and bold. This mechanism of tokenized stock co-ownership isn't really explained in detail in the materials we have, but it seems to be quite an ambitious effort to link the value of digital assets, which are tokens, with traditional value, which is stocks. Perhaps this is done through Punkverse as a bridging entity. An interesting combination. The overall purpose of this 3B ecosystem seems to be to create a closed-loop cycle. Popchain brings users into Luma to generate value from hash power, Nevix provides liquidity and a compliant exit gateway, and Punkverse can connect with traditional financial markets. A closed loop, huh? So what about the Luma token itself? What role does it play in this ecosystem besides just being a reward? Luma is the center of this ecosystem. Its total supply is fixed at 210 million and no more will be issued. This is a plus point in terms of scarcity. 210 million, just like Bitcoin, right? Yes, the number is reminiscent. According to the documentation, its functions include staking to operate nodes if users want to run a node, being used to reward hash power, voting for protocol governance, paying cross-chain transaction fees, and possibly exchanging for other benefits like NFTs within the ecosystem. In general, it is used in a wide variety of scenarios, from investing in hash power, on-chain payments, collateral, lending, use in derivative products, community governance, to receiving airdrops. The value of Luma is clearly tied to the success of this entire ecosystem and also to the effectiveness of the deflationary mechanism we mentioned earlier. Yeah, the documents also mention something called the Genesis Note, which seems quite special. Oh, right. The Genesis Note refers to the original nodes, and their number is very limited. I've heard there are only 1,500 of them worldwide. Only 1,500? That's so few. Yes, it's quite limited. To participate, a Nevix account and a minimum investment of 2,000 USDT are needed. Its main appeal lies in the superior benefits offered. For example, a significantly higher hash power multiplier, 4 times, as per the example. You receive a share of transaction fees system-wide, additional POP token rewards, governance rights, and priority access to test new products in the ecosystem. Oh, there's an example about someone named Bob investing 10,000 USDT to become a Genesis Note holder. Looking at that, the potential profits seem quite high, both from hash power and fee sharing. It's like you're investing to make a profit, while also gaining a certain position and power within the network, right? Exactly. It positions the Genesis Note not just as a tool for making money, but also as a symbol of commitment and as someone who has a voice in the ecosystem. However, it also raises the question of whether this creates a new elite class within the network. At first, it was said to be about democratization. Yeah, that's something worth thinking about. So what if we compare Luma to other projects? I saw that the documentation compares it to BitTensor, TIO, and TAO, which are already quite well known for tokenizing AI and intellectual property.
Yes, that's right.
TAO is a very impressive pioneer. They have proven the potential of building a decentralized network for an intangible asset, AI knowledge, on the Polkadot substrate platform, and they've already reached a market capitalization in the billions of dollars. Luma seems to have learned from TAO in the idea of tokenizing a digital resource, but they've chosen a different path. So what is the main difference? There are a few main points. First is the type of asset being tokenized. TAO focuses on AI and knowledge, while Luma focuses on hash power. Second is the technology platform. Tao uses Polkadot substrate, while Luma chose to build on AVM Layer 2, specifically PopChain. Choosing AVM could potentially offer an advantage in terms of a larger developer ecosystem and easier integration and interaction with other DeFi applications. Because the AVM ecosystem is bigger.
That's right.
And third, it's the supporting ecosystem. Luma has the trio of PopChain, Nivix, and Prangverse right from the start, providing what seems to be a fairly comprehensive solution from users to liquidity and compliance. Tao, on the other hand, is developing their ecosystem in a different way. So you could say that Luma is the next generation with greater potential, but it's also at a more nascent stage compared to Tao.
That's a fair assessment. Luma is on its way to building an open financial infrastructure for hash power, leveraging the EVM ecosystem and lessons learned from the previous generation of DeFi.
The potential seems to be there, but the risks at this early stage are always present as well. They're not copying Thea, but instead targeting a specific niche with their own unique approach. Okay, so to summarize what we've analyzed from these sources, Luma Protocol is a project aiming to build DeFi 3.0 by anchoring value to a real-world asset called hash power. They've designed a series of rather complex mechanisms to balance profit, equilibrium, and sustainability. At the same time, it's supported by a three-pronged ecosystem that looks quite robust on paper, from attracting users, liquidity mining, compliance, all the way to bridging with traditional finance through JetFi. Exactly. If we look at the bigger picture, Luma is part of a major trend happening in Web3, which is the effort to turn digital assets and even real-world assets into things that can be traded, combined, and generate profits in the DeFi world. In particular, the effort to connect compliantly with the traditional financial system through partners like Nevex is quite an important strategic move. If successful, it could help DeFi access much larger capital flows and user bases than it currently has. That's right. This also raises a rather interesting question. We've seen efforts to tokenize knowledge assets with NFT DLSOS and to tokenize hash power with Luma. Yes. So are there any other types of assets, whether digital or in the real world, that are currently overlooked or whose potential hasn't been fully tapped? Could they be unlocked? And could they be democratized using similar principles to what Luma is trying to apply? That is, combining real value with a sustainable token model and a closed supporting ecosystem? That's a great open-ended question.